Tesla's just after reported positive earnings for its fourth consecutive quarter, clearing its final hurdle for S&P 500 inclusion. You're probably thinking now is a really good time to be buying some Tesla shares before they skyrocket in share value. Well, I'm thinking the same as well, but let's just hold that thought for a second. After Tesla released its Q2 earnings report, share price fell by around 10%, and that's around $200? And with a volatile stock like Tesla, that could just drop to like 20%. So if I do invest now, will I be risking some loss for a potential breakout when Tesla does join the S&P 500, or will I just be sacrificing my hard-earned money on an overextended ship that's about to sink? Hey guys, before I discuss Tesla's earnings report and what that could mean for the future of the company's share value, let me clear up why Tesla has been trading under $1,500 for the last few days after the earnings report came out. The main reason is that long-term predictions do not correlate with short-term performance. So when a positive earnings report comes out, the stock may go up. But that stock may also go down or even consolidate depending on that current market dynamic in that point in time. If there are more buyers than sellers, then the stock would be high in demand, meaning that it would climb in price. And of course vice versa, if there are more sellers than buyers, that would mean that the stock price would fall. Remember, it's almost impossible to accurately predict the future patterns of any stock just based on its earnings report. For all you know, the stock could climb after reporting negative earnings due to the input of some multi-billion-dollar investment fund. Secondly, as you all know, Tesla is a momentum stock. This means that the stock will move in a particular direction until sufficient resistance is met, pushing it back in the opposite direction. If you look at the performance of Tesla over the last few months, it went from lows of 300s to 400s all the way up to over $1,700 just over a few months. So perhaps traders have been accumulating stocks during this period of time, and after the earnings report came out, they've decided to sell and lock in their profits, causing this sudden shift in momentum. Now that I've hopefully cleared all that up, let's move on to the main topic, S&P 500 inclusion. So what is the S&P 500? Well, it's a stock market index that analyzes the performance of 500 large and leading companies listed on stock exchanges in America. Inclusion into the S&P 500 requires certain criteria to be met. In our case, Tesla already met the market valuation and liquidity requirements to be eligible for inclusion. However, the company's most recent quarter's earnings and the sum of its 4 trailing consecutive quarters were required to be positive. This criteria was of course met on the 22nd of July when the report came out, and Tesla had a GAAP income of $106 million. So I guess with all of this in mind, the next best question to ask is now the best time to invest in Tesla, or should I steer clear of its shares? Well, let's not forget, just because Tesla is eligible, that doesn't mean it's going to be added right away. Let's just look at Tesla's market cap closing in on around $300 billion. This would mean for inclusion into the cap-weighted S&P 500, significant readjustment would be required in the index's weightings. Therefore, the index committee that determines which stocks enter the index also must determine what the best time is for inclusion and for rebalancing the stocks. Due to the difficulty and amount of rebalancing involved, Tesla's inclusion may not happen anytime soon, as the committee tries to figure out the massive implications due to such an addition. And now we don't know how long that could be. That could be early September or even the beginning of the next year. So now that we have a rather vague idea of when Tesla will join the S&P 500, let's look at the effects of such a transition. Let's start off with the biggest factor to be taken into consideration. According to S&P Dow Jones, index funds passively invest a staggering $4.4 trillion into stocks that are part of the index. So when Tesla does join the S&P 500, all these funds managing trillions of dollars will have to buy the high-flying stock in bulk as per their requirements, and this would obviously cause a flood in demand for Tesla shares. And like I said, at a market cap of over $300 billion, Tesla would be easily one of the most valuable additions to the S&P 500, and funds like SPY would have to buy out over 20% of all Tesla shares available for trading. Now, in addition to this, the world is on the verge of the electric car revolution, and Tesla is one of the most prominent companies shaping it. So one could say that the inclusion could be somewhat of a symbol for the beginning of a new era. While governments across the globe try to incentivize drivers to switch from fossil-fueled engines to tackle climate change and also to reduce carbon emissions, Tesla enjoys its position at the forefront of the adoption of electric vehicles. Let's be honest, Tesla is the millennial favorite. The company produced one of the most popular EV ranges and built an extensive battery charging infrastructure, encouraging wider acceptance among consumers. It kind of reminds me of that time when Yahoo joined the S&P 500 during the heat of the dot-com bubble. Back then the internet was the next big thing, and Yahoo was only the second internet stock to join the ranks of America's 500 biggest companies. The inclusion was more of a symbol for a new era. It was a sign that internet companies were all of a sudden taking over the S&P 500, and reinforced by the dot-com mania, this likely did magnify the inclusion's effects on Yahoo's stock price. Now, keeping all of this in mind, what if the S&P 500 inclusion could act as a catalyst to skyrocket Tesla's share price even further? Let me know in the comment section below. If these aren't enough reasons for you to be buying Tesla shares, well, let me give you one more. Tesla's announced its Battery Day, which is scheduled to be on the 22nd of September of this year, and that could act as the next catalyst to push share price even further. The event is slated to reveal new game-changing battery technologies, including a cell that could last for up to 1 million miles. In an environment where legacy automakers are quickly closing in on Tesla's electric car lead, such a battery could easily set Elon Musk's company further ahead, as if it wasn't already miles ahead. But anyway, the announcement could also reduce battery production levels to the key $100 kilowatt per hour level, and this could also give Tesla more financial flexibility while pricing its current and future EV models. The stock has been blowing up over the last few months with none of these catalysts to help it, so you can probably imagine what could potentially happen if even one of these factors come into play. Watch the charts and make your moves based on price action. At times, Tesla's stock price does trade a bit irrationally, but the company's trajectory overall tends to be extremely clear. And that's it for today, guys. I really hope that you all found something useful watching this video. If you did, smash that like button and subscribe to the channel if you already haven't. Also, let me know your thoughts in the comment section below, and feel free to share your opinion on the stock's trajectory in the future.